In today's lender review video, we are covering another mortgage lender who can help potential home buyers who have bad credit with just a 5% deposit. So if you do have bad credit and just a 5% deposit, then make sure that you stick around. So with that being said, let's go ahead and take a look at what Kent Reliance 5% deposit mortgage range has to offer. So, like we normally do, let's go ahead and ask ChatGPT who Kent Reliance is. So, Kent Reliance is a financial services company based in the United Kingdom. They specialise in providing specialist mortgage lending, savings and other financial products, and are known for their expertise in niche mortgage markets. So yeah, I would absolutely agree with this. We use Kent Reliance a lot at My Mortgage Finder, and they do help people who are a little bit outside of the norm, and one of those things is typically bad credit. And just to emphasize once again what a big deal getting a mortgage if you do have bad credit is with just a 5% deposit or anything even less than that. It really is a huge deal. In the mainstream mortgage market, you might be able to get options with a 5% deposit and 10% are common, but if you do have bad credit, the norm normally is around 10%, up to sort of 15%. So to be able to get one with just a 5% deposit, it really is a big deal. Okay, so here's a quick screen grab that I took from Kent Reliance website earlier on, and it just kind of highlights a couple of their key offerings. So it says here rates from 5.89%. It says up to 95% LTV. That stands for loan to value. So the amount of money you're borrowing against the value of your property. So that would be basically like a 5% deposit. And a couple of things it says here, fixed and percentage fee options. So that's basically saying you can take a product with a fixed fee or a percentage of the amount that you're borrowing. It says purchases up to 95% loan to value and remortgages accepted up to 90% loan to value. It says here no maximum loan amount on selected products. So some mortgage lenders will only lend up to a certain amount. Basically what Kent Reliance is saying is they don't have that cap in place for some of their products. And it's saying here £75,000 minimum loan value. That's pretty good. Most lenders have a minimum loan value in place, and £75,000 is a pretty lenient one. Okay, so let's go ahead and take a look at some of Kent Reliance adverse credit lending criteria if you are putting down a 5% deposit here. So it says here maximum plan LTV, 95%, so that's if you're putting down a 5% deposit. And it says here county court judgments or defaults, 0 in the last 36 months. There is a small stipulation on that. We'll come to that in a second, but basically what they're saying here is you're not allowed any in the last 36 months. If it's over that, it should be okay. Missed mortgage or secured loan payments. Missed mortgage payments, hopefully that's self-explanatory. Secured loan payments, basically what this means is a loan secured on a property. So it might be like a secondary mortgage. And basically what that's saying is you're not allowed any missed payments in the last 12 months, and it must be currently up to date. Okay. Unsecured arrears, so just to be clear here what we mean by unsecured arrears, things like missed payments on credit cards, loans, hire purchase agreements, maybe store cards, these types of things here. Basically anything that's not secured against a property. And it's saying here 0 in 12 months, and it must be currently up to date again. So you're not allowed any missed payments in the last 12 months there. And then it says here, the maximum status, this is referring to the unsecured arrears here. It's basically saying it must be currently up to date, which we've covered before. And the maximum status you can have is 2 in the last 24 months. When it says maximum status, it's relating to what it looks like on your credit report there. So what that's saying is no more than 2 missed payments in a row. That would be known as a status 2. Nothing more than that in the last 24 months. So it's basically saying none in the last 12, but no more than 2 in a row between 12 and 24. And then it says here, debt management plans, IVAs, individual voluntary arrangements, DROs, debt relief orders, bankruptcies and repossessions, they're not acceptable at all. So basically what they're saying here is if you've ever had one of those, it's not one for them at this loan to value range. Now, below here it does say all CCJ, so county court judgments and defaults, must be satisfied prior to mortgage application. So basically what it's saying is if you have had some of these things and you haven't paid them back, that's not okay. But if you have paid them back, providing it doesn't contradict any of the criteria we've been through above, then that's okay. But what it does say is they are ignored if it's less than £300 in total and if it's satisfied. Okay, so let's say, for example, you've got a CCJ for a parking ticket for £297 2 years ago and it's been paid back, they're going to ignore that for this criteria. Okay, it says here the minimum loan value here is £50,000 and the maximum loan is 1.5 million. Great, and then again you'll see really the rates here, they start at 5.89%, 75% loan to value, and then they gradually go up all the way to 95% at 7.14%. Okay, on the next screen, I'm just going to show you as well, if you do actually have a 10% deposit, then they do have some slightly more lenient criteria as well. So just while we're on topic, I would just like to show you this. So if we have a look on the screen, it says maximum plan loan to value here, 90%. County court judgments or defaults, it says here 0 in the last 24 months. That's different from the one we looked at last time. It was 0 in 36 months. It says here county court judgments and defaults ignored when one of the following applies. Less than £300 in total and satisfied, satisfied more than 12 months ago, and registered more than 24 months ago, whether satisfied or not. So again, that slightly differs from the last plan that we looked at. Missed mortgage and secured loan payments, it says 0 in the last 12 months and currently up to date. I believe that is the same as what we looked at last time. It says unsecured arrears here, 2 in the last 12 months and currently up to date. So I think actually that is a little bit more lenient than the one that we looked at last time with a 5% deposit, because that was 0 in the last 12 months and currently up to date. It says here maximum status. So again, this is talking about this unsecured arrears in particular. 2 in the last 12 months. Maximum status, I apologise. Currently up to date, previous maximum status ignored. So that's slightly different. It's saying, yes, it must be currently up to date, but there's no real maximum on the previous statuses that you've got. One thing it says here as well, it says about communications, utilities and mail orders. It basically says here that it's ignored when the balance is less than £500. So when it's to do with things like communications, that's like a mobile phone bill, broadband, utility and mail order, it's basically saying that the unsecured arrears in that element will be ignored, providing the balance is less than £500. Debt management plans. So this differs from the one that we looked at last time with a 5% deposit. It's saying here, as long as it's been satisfactory, as long as they're happy with the conduct and the conduct has been good for the last 12 months, they actually can be okay with that. IVA, so individual voluntary arrangements, debt relief orders and bankruptcies and repossessions, just like last time, they are not acceptable. Okay, so now that we've covered the criteria, let's go ahead and take a quick look at the rates. The main thing that differs here are the rates on offer. Because the lending criteria is slightly more lenient, meaning, from the lender's perspective, they're taking a little bit more risk. They do charge a little bit more money, and that's reflected in a slightly higher interest rate. So you'll see here, the rates start at 6.04% if you're putting down a 25% deposit, and then they go up to 6.89% if you're putting down a 10% deposit. There's also the product fee like there was last time of £995. Interestingly here, the maximum loan is unlimited. It wasn't unlimited before. The minimum loan size of £50,000 is exactly the same. And the last thing that I just wanted to cover off with you is there's just a couple of things that's worth noting with Kent Reliance as well, that there might be some useful features for you. The first thing here, this is just a screen grab I took from the website, just about a couple of the USPs that they claim to have. We consider 100% of secondary income in many scenarios. So it says here, we accept multi-source income from employment, self-employment, or a combination of both. So basically what that's saying here is, let's say you have a situation where you are employed, but maybe you have a business on the side. Providing they get comfortable with the sustainability of that, they might be able to accept the income from both. Not all lenders will do that. One other thing that I'd really like to point out to you here as well is, it says here self-employed. We accept applicants with a minimum of 1 year's accounts. And it says here we can work on a projection for year 2 based on an uplift of up to 30% in the first year's figures. So, a couple of things here. It's basically saying they're happy with just 1 year's accounts, which most lenders will want a minimum of 2 years. And it's basically saying they can work off the latest year's accounts as long as those latest year's accounts are no more than 30% more than the previous years. And basically what that means to you is if your latest year's figures are a little bit better, it could just help you borrow a little bit more money. If it's over 30% though, they're not going to allow you to do that. So there you have it, Kent Reliance Mortgages. Like we always say, it's not going to be perfect for everybody, but if you do have a 5% deposit or even a 10% deposit and you have had or do have some bad credit, then it might be a great option for you. So if you do have any questions or any ideas for future videos, please feel free to pop those in the comments below. Alternatively, you can send us an email and our email is in the description. So thanks for watching. Please make sure that you hit the subscribe button and you turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.